What is going on? Welcome back to the channel. So today I want to talk to you briefly about SoFi. In specific, why shorts are still lingering. So I want to go over all of that. I'm still going to do my PM video going over data points and whatever else. So stay tuned for that. But without further ado, let's get right to it. So this whole video is actually prompted because of this. So 𝗖𝗢𝗡𝗘𝗖𝗧 did kind of respond to my original post on Twitter, just said they will deliver solid results, meaning SoFi, but I don't understand why these people are still shorting. So I just wanted to educate. So on a lot of my channels, I have quite a lot, I want to try to educate as well as interpret data and stuff like that. So when it comes to shorts, yes, they have lost their shit over the last little bit. My apologies on the French, but generally looks like since August, they've lost a good around 600 plus million. So 600 to probably around $700 million. So pretty fair share of money there, but essentially still leading into their upcoming Q3 earnings, which, as I pointed out, this is the most optimistic analysts have ever been. And plus the data points on a macro level all kind of validate that the economy is strong. Unless like World War III or some crap happens like that, things are a-okay. So SoFi's business is in theory going to continue to flourish, but still 16.23% of the free float is being shorted. So why are shorts still in it? And in my opinion, has to do with two different things. One is trends. Second is manipulation. So let's talk on trends. And this trends can be kind of extended to even long investors, because I've covered SoFi on and off like every single day for a good year and a half. And so you see a lot of people at these peaks right here, they start to sell out because they know SoFi, at least historically, always kind of sells off at key kind of resistance levels, and then they buy back lower. Rinse, repeat. Rinse, repeat. So if longs are doing that, shorts could play the exact same game. So essentially it is just trends. Every so often you see SoFi have these kind of breakouts similar to what happened in December, pretty much almost 1 year ago. But when it comes to this time around, I think there's a lot of good justified reasons for it to continue up and not really break down as what it has been in the past. But this is where the other side comes into play, and that is manipulation. Whether it's, again, I don't want to accuse Citi, JP Morgan, and all these, actually, sorry, not Citi because they gave a good rating, but JP Morgan, for instance, who did give a sell $6 rating leading into their earnings. And I've already talked on in the past how that is very abnormal. Like, doesn't logically make sense for any entity to give ratings leading into a company's earnings. Like, you don't see that unless they're trying to manipulate for their own benefit or something else. So like I said, I think it's a twofold event. It is fair to assume that whoever is shorting clearly does have a financial interest in really bringing it down. And SoFi is trying to really make a name for itself in one of the oldest sectors pretty much in the market, right? So it's not an easy task. I've been saying that same phrase pretty much when I started to cover SoFi, that it isn't going to be easy overnight success. It is going to take a lot of pain up and down, and you're going to have a lot of people betting against you and a lot of big names in fact as well. So essentially that is why shorts are still lingering around, because just stubbornness, manipulation, and trends. So you have a lot of people, roughly around 1.69 million shares, still lingering in SoFi because they feel probably this time around will be similar to right here where it does pull back. Historically, I think we all know that there's always a FOMO run leading to SoFi's earnings. Then regardless of the results, it trends down. Once again, kind of just repeating patterns. So that's pretty much answering the question on why shorts are still lingering. Beside the point though, in the past, shorts have returned a little bit more shares, at least, because if we kind of move this back over here, so the short interest roughly, actually I'll get rid of all of this so you are able to see it. And so ultimately December short interest was around 15%. And kind of returned leading into January around that 13%. So ultimately shorts do take advantage of this sell-off and then they return. And so lo and behold, by them returning, it kind of adds that buying pressure. Once again, another pattern. So yeah, I really hope this time around SoFi's upcoming earnings, like every key metrics is just a big FU to shorts, and then it just kind of propels higher. And like I said already, a lot of the data points that have been coming out on a macro standpoint really do validate that SoFi's fundamental business by the tail end of 2024 and leading into also 2025 is going to continue to trend up. So that's a quick answer to why shorts are lingering still, but needless to say, I still think that they are kind of screwed. But what do I know, right? As I always say, sometimes my crystal ball is wrong. So do your guys' own due diligence. Don't forget to hit that thumbs up and subscribe. I always greatly appreciate that. And then one final thing, I did have and launched my memberships. So if you like the content, want to support the channel, you can definitely do so. Or if you want buy signals on stocks and options, that's also a tier for you as well. With that said, appreciate all of you watching.